All right, welcome back to the Business Roundtable Podcast. I'm your host, David Carr of Steward Your Business, bringing teams together to accomplish great things. And of course, great guests. We have a brand new guest this week, Adam Koós, here, and he's going to share some great insights. And unlike you've never heard on this podcast before, I'm super excited.
Ooh.
Yeah, look at that, right, Adam?
Is a high bar.
Well, you bring up a different set of skills. We were just talking before we started recording this podcast, where I wanted to dig into, talk about trading leadership, applying market discipline to life, business, exit strategy. You have a wealth of experience, Adam, and so you have if you're watching this podcast, not just listening, you're going to see Adam's credentials here: CFT, CMT, CEPA. If you don't know what those mean, we'll unpack them a little bit. But basically, Adam speaks Wall Street, Main Street, C-suite. He's going to help you as a business owner, as a leader, to show up better and help run your business, whatever capacity that is, better. It's about we're not going to just talk about money here today, but really about how you think, how you lead, and how could you exit your business with integrity. So, Adam, before we dive into the meat of that, I always like to give our guests an opportunity to take us back a little bit, share us a little bit about your background, history, what got you to what you do and why you do what you do today.
I totally just stole Wall Street, Main Street, and C-suite. I'm going to start using. You're going to get checks in the mail or not.
Boom!
I think that is really freaking creative, man. I can't believe I didn't think of that, or my friend GPT didn't think of that. But anyway, all right. So I won't give you the long version because it is long. I've been doing this. I'm 46 now, 46 years old. I've been doing this for 24 years though, which is nuts. I got very lucky to start in this business very young, but it wasn't a traditional path. I went to school. Grew up Northwest Ohio. Big, huge Browns fan. Very sad season ticket holder my whole life. But came to Ohio State. Middle of Ohio, Columbus, Ohio. Went to college here because my parents did. My dad was first in his family to go to college, and I wanted to be a trauma surgeon. So that's the weird part of my story, I guess. Is that he was an optometrist. I love the medical field. I still watch surgeries on YouTube for fun. I know it sounds weird. I love it. I'm glad I didn't do it though, not because I didn't like it, but because I'm glad of where I went. So to make that long story short, I'll skip all the reasoning behind why I pivoted. But my senior year in college, I dropped out of the pre-med program. I called my dad up, walking down Neal Avenue behind the library, actually, at Ohio State. And I said, hey, I'm dropping out of the program. And he says, what are you going to do? And I said, I have no idea. I thought about a couple other ideas, but I didn't really know. And he says, what about becoming a financial advisor? And I'm like, what are you talking? I took one econ class. I didn't even know what the ticker tape was that came across the bottom of the screen in CNBC.
Yep.
And he says, well, you've got that virtual stock exchange account you're always messing around with. And he's like, you're really good with people. And I feel like you're good at teaching and educating. And, too many people in this industry are, they know the numbers, but they don't understand how to communicate the numbers. So he's like, and plus you could be a financial surgeon. And that's what landed.
Okay. Yeah.
It's not the emergency surgery all the time, but it's still diagnosing financial problems and fixing them. So I met his financial advisor. Was very quickly kind of fast-tracked through their recruiting program, a national brokerage firm that I'll leave unnamed. And I just did really well there, despite the market going against me. So I started my career at 21 years of age, 10 days before the World Trade Center went down. And I was literally going door to door, business to business, trying to get people 3 times my age to trust me with their life savings. And it wasn't easy. Yeah. When the market's precipitously falling, right?
Yep.
I would wear prescription-free glasses to look older. I had one of those Dick Tracy trench coats, When I started my office, this is embarrassing but true. I bought nothing but mahogany furniture and those big leather chairs with the rivets. That would make me look older. And now I think back, I'm like, now I just want to be younger, But anyway,
right.
But anyway, so that's how I got into the business. And I was a fast starter. I always said that I would work harder than everybody. I just needed the right gasoline. I sought out a lot of mentors. I would always say the same thing over and over again. I'd say, look, nobody's going to outwork me. I'm like a V12 engine. I just need the right gas. What's the gas? Like, give me the gas. And I had lots of mentors, some of which probably didn't want to be my mentor, but I just kept bothering until they talked to me. I learned over the years that people, for the most part, who are successful have had other successful people help them, and they're willing to give the shirts off their back to help you. So I'm the same way. And I just, I love mentoring others and lots of mentors myself. I was just today, like I was teaching, doing a webinar for the Chartered Market Technicians Association, with a bunch of, nerdy chartists and technicians, stock traders. And I was telling them about how during the 2016 CMTA conference, I saw Charlie Kirkpatrick speak, who's one of the 4 legends in technical analysis. He's written books on the subject, and he got done and we're on a boat on the way to Ellis Island, and it's cold and nobody's upstairs except Charlie. So I follow him upstairs, and we're sitting there talking for a while, and I start feeling bad that I'm taking so much of his time. So finally I'm like, hey, do you care if I just come to your house for a few days and pick your brain? And he goes, sure. So I spend,
wow,
4 months later, I fly to Kittery, Maine, and I spend a weekend with one of the best traders in history, one of the most well-known market technicians ever, hanging out at his living room table with our laptops out, talking trading strategies, And I think anyway, so I just, I don't know. I always believe in that whole cliche that if you're the smartest person in the room, find another room.
Yes.
And then life changed for me again. I mean, I went through a lot, and we have grown a very successful wealth management practice over the years. 7 figures, and then life changed during COVID for me because I got to the point where we were having 25 appointments a week, and then COVID happens, and we have 8 weeks with 3 appointments. Like there's nothing to do. All that happened was happy hour got earlier, right? And I read this book called Walking to Destiny by Chris Snyder, which was all about, the end of a business owner's career. And it threw some stats out there that frankly made me angry. And the stats were this: 80% of business owners' net worth is in their company. B, 80% of businesses never sell, they dissolve. And C, 75% of the businesses that do sell for less than market value. And those 3 stats made me so angry, I decided it was time to start a business transition and exit planning company to help save these owners from themselves and, think about things in a little different way, as opposed to just being an employee of your company and working really hard to kind of change the way you run your company and really get enterprise value out of it and have something to show for it for you and your family, monetizing your life's network. Or life's work. That was way longer of an intro than I probably should have done.
It's okay. It's okay. Well, so here's what I want. Well, number one, I love that you have mentors, and why we have people on this podcast like yourself, Adam. So other listeners, our listeners, are business owners or entrepreneurs, or even if you're not quite there yet, you're already starting to think about this and realize the value of somebody like Adam coming alongside you. Don't go alone. Don't be siloed, but find somebody like Adam. And that's where we're going to dive into it, Adam, because I want to talk a little bit about some ways of mastery. So, trading, like you just talked about, trading isn't just about the money. Really, it's about mastery. And I was going through this, I wanted you to maybe walk us through, Adam, like what is the mindset of, being a trader, looking at as a leader, like how do we show up well? And one of the things that you've learned, because I think, yes, you help them with exit planning, but there's a mindset, there's a way of being that you've transitioned, and so I want to hopefully impart that with our listeners today.
Yeah, here's the good news. It's going to be really easy because you were talking about that offline.
Yep.
We didn't get into it, but I immediately was like, oh, this is going to be fun because nobody talks about this stuff. And I don't think all the time, I mean, I don't think you're born with it, but you have to learn resiliency. And if there is one thing that has made me more successful than any other one thing, it would be resilience. I remember one of my mentors, Tommy Dorsey. He owned Dorsey Wright and Associates, sold it to NASDAQ in 2015 for $240 million. I remember calling him up and saying, "Hey, Tommy, since you're not doing anything, you want to come hang out with me and my wife for a weekend with your wife and talk to my clients?" And he's like, "Yes. Well, just so you know, I'm not doing anything anymore." But he did fly to town, and we hung out for the weekend. But he taught me, and I had it engraved back when iPods were cool. On the back of my iPod, I had engraved "Fail fast and move on," because the first lesson is fail fast. Well, I guess the first lesson is fail. Fail more than everybody. Yep. And then when you fail fast and get over it, and then just move on. Like if no and not yet, then who's next, right? So I think that I learned from a very young age, and I'm going to get really personal here.
Yeah.
I grew up in a small, suburb town west of Cleveland, and very, 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 very diverse place. And I would not change my childhood for anything. But there was no hope of a skinny, redheaded, freckled ginger being popular in this school. It wasn't happening. I got in some fights. I got picked on, sometimes. I had great friends. I think I had one. I only had a couple white friends, and so it's like I grew up in a place where I wasn't the majority, the popular person. I was not going to get in the yearbook as most popular. I got class clown and best sense of humor. That's all I got. So what I think that taught me growing up was that hearing no was no big deal, and that it was just a numbers game. And what I try to tell my kids this, because my boys are 15 and almost 12. And I always tell them, it's like every opportunity to fail is an at bat. And in Major League Baseball, if you go up to bat 10 times and you miss 7 times, you get invited to the All-Star game.
Right.
So the lesson there isn't just, you have to have a 30% conversion ratio and whatever it is you're selling, service, product, it doesn't matter. I think the lesson there is you just have to work, and then you'll get better. It's like dating. It's like you go up and you ask for a number, you don't get the number. You didn't come away with nothing. You came away with a lesson. You're going to get better at it. And if your hitting ratio, if your batting average is 100, well, just bat more than everybody else. You get to choose how many times you go up to bat, right? Anyway, I think resilience is something we could probably talk about for an hour. But
absolutely. Well, you're
failure get in your way. I mean, I don't know.
That's a great. You're hitting me too, Adam, because I was just talking to a colleague today, and we're talking about some things doing things with my company, other elements, and he's like, just get the reps in there, and we try. Sometimes we get paralysis. What is that? That paralysis. Yeah, we're just trying to get everything just right, and we don't even know if this is actually going to even work. I mean, how many companies try to get everything? And I had a conversation with that one podcast about coming to getting a proof of concept or getting an idea. They're like, oh, it's going to be this or whatever. And it's like, that doesn't work. It doesn't matter, but we've got to figure these things out quicker so that we're not spending all this time and energy. And we want to play, honestly, like you said, I think play to win, not play not to lose.
Right.
Right. And sometimes people are playing not to lose. And that's a really dangerous place to be, in my opinion.
You won't make it if you play not to lose. That's at the risk of sounding like one of these crazy YouTubers that's way too extreme for me. I would argue that playing not to lose is somebody who works for someone else. Is that fair?
Yeah. Because you're not betting you're not going all in yourself. I will say, as a business owner myself, and when I made that decision, I'm not relying on anyone else. I mean, I was at a big company in 2009 when the market really was tanking. And I realized there's no safety there. It was a publicly traded company. Like, hey, we got to cut your workforce X. It was kind of indiscriminate. I just happened to be caught in the net, though. It was like, okay, well, I'm like, they're a big company. And then what got me to step into a smaller company at the time was like, there's no quote unquote safety, if you will. And my best bet is myself.
Yeah. Isn't that ironic?
Yeah. Right.
Yeah. It's weird. But yeah, the analysis paralysis. I took down a note here. I'm guilty of this sometimes too, like planning to plan to plan to plan to plan.
Yep.
One of my friends and fellow CEPAs, which by the way stands for Certified Exit Planning Advisor. So it's all about business transition planning, exit planning. One of my good friends in the EPI, he talks about the importance of relentless execution, and I just love that phrase because at a certain time, it's time you just got to go. It's like people who are like, oh, I'm not ready to have kids yet. I just gonna wait till I'm financially ready. It's like, well, you're never going to be financially ready.
Right.
Just do
it. You've just got to get in there and go. Right. I 100% agree. You say that. I was funny. I was just putting a quote of that on my LinkedIn the other day about that. Just the fact that, hey, don't just get so stuck in just planning so much. One of my mentors is Michael Hyatt. I'm certified with Full Focus Planner. And one of that is, he was just saying, you just got to get started. You've got to take action today. And it's not perfect. I use the acronym, start the action required today. Start, like, what are you going to do? Get going. And, you know, rather than, like you said, just kind of thinking. And I think that's what happens to a lot of us. And I think probably from your thing, business owners, maybe they put their heads in the sand. They're not really looking at some things. And in investing, I'm not going to think about it. I'm going to try and put it away. It's like, well, no, we need to be taking action and be proactive here.
It's like it's so analogous to so many things, right? Like diet and exercise, like going to the gym and getting a shitty workout in is better than no workout.
Right. You did something. You moved, in the sense of, there's, and I like to say there's pain either way. There's going to be pain. So there's your pain in your inaction. Is there pain in your action? Right?
I like that. It's gonna be pain. So just
choose your pain. Choose your pain. Right. I'd rather choose it than have it kind of inflicted on me by I'd rather make the consequences like I want this because I know it's going to be better for me in the long run. Yeah, absolutely. And I think you're looking, like you said, we're not trying to be perfect. We're looking at some things and we're just taking these action. Like, what does that say? Progress over perfection is another one. A statement I like to say is that keep moving. And I think you're an example of this. You've gone through these resilience, saying, "Hey, look, I'm not going to sit it out. I'm not going to be just blaming everything. I'm going to have to make a move because I think sometimes we can get we're looking at the circumstances, we're letting that dictate instead of like we need to make decisions. We need to be proactive here."
Yeah, I think I mean, just talking to my son coaching football the other day. It's like he got mad because some kid, he's playing right corner, and he followed a guy across the middle, and somebody caught the ball in the flats on his side, and I'm the coach, and one of the other players sitting next to me goes, his name's Camden. He's like, Cam, he's like, you didn't stay home, and because that's all I'm doing. I'm like, corner, stay home. Nobody gets outside. Use safeties. Nobody gets behind you. And
right.
And Cam immediately gets defensive and says, like, well, I was, whatever. I don't even know what he said. And I told him in the car on the way home, like, look, I was like, you in life, not just football, but in life, when somebody suggests something to you, especially when they're on your team, realize they're probably doing it to help you, however it might sound. So the first reaction shouldn't be to defend yourself, but instead to say, well, why is he saying this? And am I wrong? And is he right? And maybe I should ask for clarification. And then at the end of the day, if all you do is say, you know what, I'm going to think about it. That's a whole lot better than a fight.
Yes, absolutely. Well, and I think as you're saying, as you're coming on somebody's like team, I like literally you're inviting a business, you're working with business, I'm on your team. When I ask you these questions or provide these insights, can you speak frankly and candidly with them, or do you have to be like, I want to be able, like you, like talk very frankly and like, let's help you get healthy and well. That may sting sometimes. That's not my point. Is I've moved from Mr. being nice guy, Adam, myself, to being kind, and I use kindness as a way of connecting with people and not being nice. Unfortunately, I wasn't too nice for many years, and people will say I was nice, and I used to take that as a compliment. I don't anymore. I'm like, no, I don't want to be the nice guy. I want to be the kind guy. But speak to that a little bit, Adam, about where you've been successful with businesses that can receive what you're just saying versus the ones that don't.
Yeah, I think that in our business anyway. So I have a few companies, by the way. So before I totally confuse everyone, I've got the management firm, which is Libertas. I've got Elevate and Exit, which is the exit planning business transition consulting firm. Then I have Adrenaline Advisor Consulting, which is a firm to help other financial advisors grow their firms. And that's where I see this a lot, what you're asking about right now.
Yep.
And I don't know where I heard this quote, but it goes, actually, it was one of my mentors, Mark Zinder. He said, you give a successful financial advisor a good idea, and they'll come back in 3 months giving you all the great results that took place because of the idea. You give an unsuccessful financial advisor the same idea, they'll come back in 2 weeks with 5 ways to make it better. So
interesting. Yeah.
I think that so much is people are opinionated. It's like the old dog, new tricks. I feel like in order to be successful, you have to be open-minded. Everybody has an ego by definition. We all have egos, right? But I think we all have to be really, really open to being coachable and change and improving. And then I really do. Well, I'm not this person. I don't understand this kind of person. So you might be able to have a better, piece of advice on this than I do. But I don't understand, or nor can I wrap my head around the person that's in the middle. That takes the leap, but then doesn't take the advice. I don't understand that. It's actually really frustrating for me.
Yeah.
I can't count the number of times over the last 2 decades that, a financial advisor has said, hey, what is it, that thing you're doing? Can you teach me that? I'm like, yeah, I'll teach you. I'm so excited to teach them. Can't wait. Can't wait to teach them. And more importantly, can't wait to get the text message that said it worked and all the results. Right. And then they don't do it. And then I follow up in 4 months. I'm like, hey, did you ever do it? Like, I've been trying to get around to it. And it's like, do you want to succeed? Like, do you?
No, that's a great question. That's a great question. And I would say there are times where people, in theory, I would say, here's what I for that. I think there's genuine interest, Adam, you're saying, but the question is, are you actually committed to doing it? Are you interested or are you committed? And they're interested. They're interested. It's appealing. It's something that I might be interested in doing. But the reality is, when it comes down to it, are you willing to do the work that required to get the desired result, the outcome? And they're not, or they're not convinced that if they do that work or the quote unquote sacrifice, is it going to get me what I really want? And to your point, you really want this, and maybe they don't really want it. You want it. Whether it's like, hey, I know it's good, but maybe it isn't. Maybe that isn't a line for you. But they think. I think, Adam, what you're saying is sometimes I think we, as business owners or individuals, we try to be maybe like, well, this person is this way, I should try to be like that, but it doesn't stick. It isn't them authentically, right?
Yeah, that makes sense. It actually made me think of something else when you said that. Like the one guy I helped in New York, 2 years ago almost now, that was the reason I started Adrenaline, was because he asked for help, and I was like, look, if we're gonna do this, like you're gonna do everything I tell you to do, otherwise I'm not doing it. And 14 weeks and 27 hours of Zoom calls later, he brought in $4 million of new clients in 4 weeks. And then he grew at 41% last year and had a record year. And it was fun. And he did it, right? He did the work. But one of the first things he asked me, and the reason it all started, was he goes, well, first it starts like, hey, how's things going? I'm like, oh, we're having a record year. It's awesome. He says, really? Well, what are you doing? What's the number one thing you're doing? And I'm like, Leo, there's no one thing I'm doing. And then he gets frustrated with me. And he goes, all right, fine. Like, just give me the top 3. I'm like, Leo, there's no top 3. Like, you build something, whether it's something that takes 10 minutes to build or 10 hours.
Yep.
Then you systematize it, build a process, and then you run it. And maybe you're not even running it, right? Yep. And then it's all those things operating like that 12-cylinder engine I was talking about earlier. And you just feed it with gas, effort. And the more you have and the more you've built and the more it all works together like a nice, beautiful orchestra, the more well-oiled it all is and the more it produces. But it's not like there's no one thing. There's no 3 things. And there's no free lunch. You've got to do the work, like you said.
You got to do the work. And I use this framework of what are you going to start doing? What are you going to stop doing? What are you going to sustain doing? And a lot of times, at least for me, Adam, there's things I have to stop doing in order to take on these things. And other people aren't willing to take on that new thing like you're talking about.
Yeah.
And keep doing what this was. Right?
You're right. That's every quarter. I started doing this a few years ago. Every quarter, I have a note on my calendar to look back at the past quarter at the things I should not have done that I said yes to. And then I look forward at the next quarter to see if there's anything I can say, I'm sorry, no, thank you to. Because there's just people like you and I, kind people.
Yes. Yes. Right.
We have a hard time saying no because we want to help everyone. Right.
Absolutely. Absolutely. That's why we're here. By the way, as you're listening to this podcast, Adam and I are making sure we're connected on LinkedIn. You guys connected with us there, and I'm going to put out all the show notes to Adam, all of your links to your different companies. You guys can check out Adam. You connect with.
Perfect.
You're bringing up so many great points here, Adam, of how you're helping people in different capacities, and that's why I love having you as a business owner, as a leader on here. And you're living through. I mean, we're going through these ups and downs. Just look at the market right now. Where we're recording this in beginning of June 2025. There's a lot of uncertainty and challenges, and how do we do this? And so, you've helped businesses, adjust and I'd say take lessons from the market. Like there's patterns, and how do we pivot? How do we successfully navigate challenges? It's so important what you're doing.
Thank you. Appreciate it.
Yeah. Why do you think, you talk, part of what you help is leaders exiting, and you talked about some of the statistics about why that isn't successful. Why do you think leaders fail to exit when they can, do it healthy, financially, emotionally? Why do you think that there's this challenge of, what are you seeing in the marketplace?
Yeah, there's a lot of reasons why. Unfortunately, there's I think most owners, if they're too busy and they're not scaling, they're not delegating, they're spending so much time in the business that they can't sell it because no buyer is going to want to buy something that's so dependent on the owner. That's the first thing.
Yep.
The second thing would be there's owners that have maybe done a decent job of scaling, but they haven't put a lot of things in place to de-risk continuity plans, customer concentration. There's all these issues with the company, but they're so busy running the company, working on the business like they should, and they're doing a good job of that. And they're making such good revenue, they just keep saying to themselves, well, I'll sell in 3 years. And then when you talk to them a year or two from now, they said, I'll probably sell in 3 years. And then they get Parkinson's or dementia. They get divorced. They die. They have a partner they have a disagree with, and the partner wants to sell. They don't want to sell, and things just go sideways. So then they're forced to sell it, and either at a fire sale or it doesn't sell at all. It's one of the reasons that businesses don't sell. So I think that's the second thing that happens. And so I think that in order to be not only truly successful in business, you have to look at your business like an investment. And you have to look at it from the perspective of a buyer. And if you were to buy a business, would you buy your own business? And, there's a book written out there by that same friend I talked about who mentioned relentless execution as a catchphrase. And the book's called "Is Your Baby's Ugly?" And the metaphor is that most people think their babies are beautiful, but let's be honest, most of them aren't the cutest things in the world. They look like aliens. And oftentimes businesses, they're ugly. And they're not ready to sell, not even remotely ready to sell. It depends on the business. We had a company a couple of years ago that said, I want to sell in 9 months. I'm like, okay, well, I can't really help you, but I need like 2 to 3 years.
Yes, right. Yep.
My target client is a business owner who wants to exit in 3 years. 5 years is fine too, but 3 years. Build a plan in 6 to 12 months. Implement the plan in year 2 and 3. We'll probably grow the value of the company both on an absolute and relative basis at 25 to 40%, maybe more, which is awesome. But you got to do the work. You got to do the plan. You got to be intentional.
Yep.
You can't just sit around and pedal the bike and think that things are going to get better unless you actually, make intentional change. So this person, I'm not going to say anything more about like where they are or who they were, but it's a company that was all paper, no electronic documents. Their CEO is leaving, and they want to sell while the CEO is leaving.
Oh wow!
They don't want to replace the CEO first. They just want to be done. It was a mess. And then of course I'm going to give you one guess. Do you think the company was worth more or less than what they thought?
Less, much less, unfortunately.
Much less.
So
it's unfortunately, there's all kinds of reasons why, and I think that there's also some fear in there. Behavioral psychology. And then the bad part is it's founded 75 to 80% of business owners who are surveyed a year after selling strongly regret selling. And that's an interesting one. And
that is an interesting one.
Always a why, because what some owners think is, well, I shouldn't have sold then. That statistic tells me then the bad thing to do is sell. Like that's not the answer. That's the why. Why is that? And the reason why is because none of them have a plan for what I call life after football. The average football player lasts 3.8 years in the NFL, and then they're 26, 25 years old, and now what?
What? Yeah.
So business owners spend their entire life's work growing and building something that they truly are a part of. Like when people say to themselves, like they say, David, what are you? Like, what are you? Well, I'm a business owner. It's like, well, no, you're a dad, you're a husband. You know what I mean?
Yes, absolutely.
But people identify themselves with what they do for a living all day. So when they sell it and they don't have a plan for what they're going to do when they're done, they're lost. So you have a huge part of the planning process in business transition and exit planning is in step, call it 3 and 4, building a sound, specific retirement plan for not just what the money looks like, but what are you going to do? It's like, oh, well, I'm going to move. My wife and I have always wanted to build this dream home in Colorado. So we're building this dream home. I'm like, what are you going to do there? Well, hang out, dream home. Hang out in Colorado. Like, okay, what else are you going to do?
What else?
I don't know. Like, why are you asking me all these questions? I was like, because you're going to be bored. That's why.
Yes.
You're going to be bored. You're going to hate your life. That's why.
Yeah, no, you're hitting on some points that I work on, Adam, with individuals too when I'm coaching them. I said, we look at the business. Absolutely. That's my lead in steward your business, that's the name of my company. However, to your point, we look holistically, like what does it look like with your relationship? How are you taking care of yourself physically? What is it whatever your spiritual being life is? What is that? Are you living your purpose? The business just happens to be a way to activate and use your purpose and get talents and gifts, like you're saying, Adam. But 100%, I've unfortunately heard many people that are very financially well off, very well off, and they're miserable, lonely people living in a big mansion or having lots of cars or whatever. And they're like, I built all this for what? For what?
Right.
You know?
Money is a unit of choice. The more units you have, the more choices you have.
Mhm.
That's all it is.
Yeah. I think, looking at this, and I think I would use the word, I guess, a financial term, rebalancing, like looking at things and are things out of whack, or like where do we want to be in how we're allocating our energy, our time, our attention. And I think that's what I hear you saying, Adam. You're looking at helping them plan and prepare so that they can be in a better place for when maybe life does happen, unfortunately. And like I totally hear what you're saying. Unexpected, you know, changes in you weren't as far as the business goes. And if you're not planning years in advance, then you're really going to be stuck. Like you said, maybe you can sell it if you're lucky, but it might just dissolve altogether. This is really sad. All that effort and energy that you created for years, right? Pouring into this.
It's terrible. And another thing that gets me kind of fired up is the people that say, well, I don't need to do any exit planning because I'm not selling for like 15 years. It's like, yeah, okay. Well, one of the things I learned the hard way, like many owners learn many lessons the hard way, is that the first real stage of growth that I experienced in my career was when I realized I wasn't the owner of a wealth management firm that was doing marketing. I was the owner of a marketing firm that just happened to do wealth management. Once I learned that, the next big aha moment was learning how to scale and that the business didn't need me all the time. And that I was, and it goes back to that identification with I am the owner. I am an owner. That's what I am. That you will love your life so much more if you can let other people take responsibility for things so that you can enjoy time with your kids and time with your spouse and maybe even a hobby. Imagine that,
Right. Yeah. I mean, so you're, and this is what I love our synergy, Adam, why I have you on the podcast. So I want here to folks, here's Adam that can help you in that, where I can help on the people side of the delegation, where he's helping you plan and looking at this bigger picture and the strategy. We need all of those things. So I agree, Adam. I'd say I choose, I want to be in the business. Like I'm held hostage, like I have to be. I want to step in, or where do I want to step in the business, right? Because it's fun, exciting, not because I feel like nobody else is going to pick it up, whatever the task or the action item that needs to be done, right?
Yeah, 100%.
Yeah. I know we're getting close to the end of the podcast, and I so appreciate you being on here. I definitely would love to have you back again. So many things here. This is a great conversation.
I was looking at the time and I'm like, God, 30 minutes already? God.
I know, we're just flying by. But what would you say? I mean, there's so many different experiences. You've already shared some great life experiences here, but I always like to give our guests an opportunity to kind of like, okay, if you've heard nothing else, if you're just listening to this and you're like, what would be like a key takeaway? Like, take this to heart as you're listening to Adam speak. What would that be for you, Adam?
I would say that it would probably be that it's like delegation, and then they'll say like, God, how did you figure all this stuff out? And the answer is, I spent a lot of money and made a lot of mistakes. Like I wasted a week. And then the answer to that is kind of like the business owner thing we were just talking about a second ago, where most business owners were selling like, oh, if you wasted a lot of money, and I shouldn't do that. It's like, well, no, I wouldn't be here if I didn't waste all that money. So I think the piece of advice I would give every owner is to invest in yourself. That means paying other people. It sounds so self-serving, but pay other people. Get mentors, of course,
Yes.
but pay people like you, David. I strongly believe if your company's making more than $1.5 million a year and under 15 million a year, hire a fractional CFO. And if you don't have one, you're going to pay for it later. hire coaches.
Absolutely.
Then just take the advice, and you'll be so much happier and so glad you did. There's just so much we don't know. It's like the E-Myth, right? And it goes deeper than the E-Myth. Somebody needs to write a book. Maybe you can write it, David.
Yeah.
It's deeper than the E-Myth that breaks it down to more than just 3 categories where you've got the entrepreneur, the manager, and the technical worker. I am the entrepreneur and the technical worker. I'm a terrible manager. I want everybody to like me. I'm not good at it. But I think that you can go deeper than that and find that there's all these areas in every business that we as owners in the beginning, we have to do it all. But as we grow, we're so much better off if we let somebody else do it. It's like the Dan Sullivan who not how thing. It's just find lots of who's and let them. I
love that. And that's why we have the Business Roundtable podcast, is so that you as a listener can hear a different voice and you say, hey, Adam's my guy. Whoever it is on the podcast, you know, I have different voices because I want everybody to say, who is that team? Because we all make up differently. You talked about the baseball analogy of teams. It's like getting all the right people in the right place and that mix of those coaches, advisors, you know. But I agree with you, Adam. You're going to go much further, faster with those versus you just kind of going on your own, isolated and alone. And I so appreciate you coming on here and sharing with our listeners today.
Thank you so much. I would love to do it again.
Yeah, this is a blast. Blast. Thank you, Adam. As we're wrapping it up here on the podcast, I appreciate all of you guys, of course, liking and subscribing the podcast. Leave your comments. We'll make sure that Adam gets them. All of our links and everything will be in the show notes, so you know where to connect with Adam and myself. And come back again until the next episode. Thanks, everybody, for listening and being here with us on the Business Roundtable podcast.